Improving financial literacy of SEDPI KaNegosyo members through capacity building. Education can be a powerful tool for breaking the cycle of poverty and economic mobility, as it can increase individuals' earning potential and provide them with the skills and knowledge needed to secure better paying jobs. It can also play a role in promoting social change by fostering critical thinking, promoting cultural understanding, and teaching individuals about their rights and responsibilities as citizens. Education also plays a vital role in addressing issues of inequality and discrimination by providing marginalized and disadvantaged groups with the tools and resources they need to succeed and participate fully in society. A financial literacy training can provide individuals with the knowledge and skills they need to manage their finances effectively and make informed decisions about saving, investing, and spending. This can help to increase their earning potential and promote economic activity. By teaching individuals about money management, a financial literacy training can help individuals make better financial decisions and avoid financial pitfalls that can trap them in a cycle of poverty. It can also empower individuals to take control of their finances and make informed decisions about their financial future, which can promote social change by helping to level the playing field for marginalized and disadvantaged groups who may have historically been excluded from financial services and opportunities. SEDPI, a group of social enterprises in the Philippines, uses financial literacy as a strategy to enact social change. It envisions the empowerment of Filipinos worldwide in a manner that they live dignified lives and productive members of society. As a social enterprise, SEDPI provides innovative financial services and effective financial education to nano enterprises and social investors. One of the goals of SEDPI is to contribute to local economic development of nano enterprises, recognizing nano enterprises as a pillar of inclusive growth. Education as a strategy is embedded in SEDPI's second goal in providing continuous education for community empowerment. The third goal is to provide social welfare protection to nano enterprises in times of calamities and emergencies through the use of indigenous coping mechanisms. Lastly, it aims to develop a movement of social investors that puts social and environmental agenda over profits. To ensure that these goals are achieved, the following are SEDPI's inputs and activities. It will conduct financial literacy trainings to its members to ensure that members have the capacity to manage their money. Providing ethical financing products and services will further give SEDPI members the chance to create and accumulate wealth with due regard to social and environmental costs. Performance of members are closely monitored and evaluated to ensure that they are accumulating savings, have adequate insurance protection coverage, and are less dependent on debt. With the activities, the following are the expected outputs. Through financial education, SEDPI members have effective money management behaviors. They are able to increase their savings and have positive accumulation of business and personal assets. Members also have easy access to social safety nets against emergencies and disasters, not just from SEDPI, but more importantly, from the government. The expected outcomes are as follows. SEDPI members have manageable debt levels and are able to use savings and insurance as more effective financial products versus dependency on debt. Their livelihoods are sustainable, and member nano enterprises also have diversified income sources. SEDPI members also have a robust financial preparedness against disasters through savings and insurance consistent with disaster risk reduction strategies. Finally, the impact would be an overall improvement of the quality of life of SEDPI members as they are able to break the cycle of poverty and move up the socio-economic ladder. The overall threat of disasters is mitigated through disaster risk reduction. Since 2017, SEDPI provided capacity building to its members on financial literacy in the form of trainings, orientations, small group meetings, and the development of information and campaign materials. The following are examples of topics covered. Importance of savings and insurance through the Mayan, good versus bad uses of loans, buying non-productive assets through savings, not loans, plan for increasing business capital through savings and reducing loan. This is an example of a visual aid used to differentiate SEDPI's financial empowerment strategy versus other microfinance institutions. Instead of loans, SEDPI enters into a joint venture with its members. The goal of a traditional microfinance institution is to collect repayments, which puts the organization's financial sustainability over the members. Under SEDPI, the main goal is to assist its members grow their livelihoods. Thus, SEDPI treats its members as equals as it enters into a business partnership arrangement versus a traditional creditor-debtor relationship where the creditor usually takes the upper hand. In most microfinance institutions, their goal is to increase the loan amount of clients, making them more dependent on debt. In SEDPI, we teach our members to save so that they reduce their dependency on loans. We emphasize, and the members agree, that a sustainable livelihood is one that has capitalization coming from income saved rather than through loans. In traditional microfinance institutions, interest is continuously charged to the client, even if the reason for non-repayment is due to calamities, sickness, and other external emergencies. In some instances, penalties are even charged in addition to the interest. SEDPI, in stark contrast, only collects service charge which is fixed. No interest or penalty is charged even on late payments. The principle is not to enrich ourselves due to the misery of others. Instead of charging punitive interest and penalties, SEDPI will assist its members find ways in order to repay and recover. As business partners, SEDPI and its members help each other so that no one gets left behind. Microfinance institutions provide insurance to their clients that usually takes months to process claims. SEDPI, through the use of indigenous insurance practice called Damayan or Dayong, pays out claims within 1 week. This is for members to avoid getting into debt in times of emergencies. Most microfinance institutions provide life insurance coverage only. SEDPI's Damayan provides more comprehensive coverage that includes life, sickness, calamity, fire, funeral, and accident benefits. SEDPI endeavors to revive indigenous money management practices that has proven to be effective since these are embedded in our cultural heritage. The main goal of savings mobilization in microfinance institution is to function as collateral to loans of members as well as main source of fund to finance their loan portfolio. For SEDPI, savings of members function as a collateral to the joint venture, but more importantly, this can be used for emergency purposes. Traditional microfinance institutions also typically offer loans to their clients to purchase non-productive assets. This will make these purchases almost twice as expensive due to the interest. In SEDPI, delayed gratification is emphasized. Members are encouraged to save for what they intend to purchase through a layaway program. This way, members pay the items at the suggested retail price, while SEDPI earns through the discount it gets due to bulk buying. We emphasize in all our financial education efforts that life is more convenient when savings is increased and loans are reduced. The following are the results of SEDPI's capacity building program, which began in 2017. As of December 2022, SEDPI has expanded its branch network from 2 to 14, covering the provinces of Agusan del Sur, Davao de Oro, Davao del Norte, Surigao del Sur, and Zamboanga City. It has outreach of 15,000 members. The standard client growth rate of the microfinance industry is 5% per year. SEDPI's compounded growth rate is 25%, which is 5 times higher than the industry standard. This indicator shows how SEDPI is able to achieve its mission to reach low-income nano enterprises. SEDPI's joint venture portfolio with nano enterprises grew from 43.3 million in 2020 to 76 million in 2022. The standard portfolio growth rate of the microfinance industry should be at par with the GDP growth. In the past 6 years, the average GDP growth is at 4.2%. SEDPI's compounded portfolio growth rate is 21%, which is 4 times faster than GDP growth for the same period. The portfolio at risk rate measures the probability of non-collection. The standard portfolio at risk ratio in the microfinance industry is less than 5%. SEDPI's portfolio at risk ratio is below 1% for 2021 and 2022, which reflects stellar portfolio quality performance. Overall, accumulated savings of members rose from 7.37 million in 2017 to 29.45 million in 2022. Insurance claims extended to members also rose from 1.59 million in 2017 to 5.87 million in 2022, with an average turnaround time of 1.25 days. The growth in membership and improving portfolio quality signals member loyalty and increasing marketability of SEDPI ethical financial products and services. The growth in savings also signals less dependency on loans to finance livelihoods and household needs among nano enterprises. The increase in insurance claims is a sign that SEDPI places protection of nano enterprises against emergencies and disasters. Overall, financial literacy reinforced ethical financing to make nano enterprises become less dependent on debt, grow their livelihoods, and be disaster resilient. In conclusion, SEDPI's model of capacity building on personal finance, together with ethical finance as a tool for socio-economic development of nano enterprises, is effective. Monitoring and evaluation is key to ensure that nano enterprises implement what they learn.